You know, in the world of crowdfunding, every single check is a little signal of belief. But right now, in 2025, those signals are telling a brand new, really unexpected story about how startups get funded. Yeah, the rules have totally changed.
For years, the golden rule of crowdfunding was all about volume, right? Just get as many small investors as you possibly can. Well, that rule has completely flipped on its head. Today, it's not about how big the crowd is, but how strong its conviction is. We're seeing this fundamental shift from a pure numbers game to a belief game.
So to really get why this is happening now, we got to take a quick look back at the wild ride that brought us to this point. It's a story that's just as much about the global economy as it is about you, me, and individual investors.
And wow, what a ride it's been. It all kicked off back in 2016 with just a handful of pioneers. Then the pandemic hits, and get this, stimulus money and everyone being stuck at home online caused this massive, record-breaking surge in people investing. Of course, things cooled off with inflation and all the rate hikes, but now, here in 2025, the optimism is back, but it looks very, very different.
And that brings us to today. When you really start digging into the data for this year, this fascinating and kind of contradictory story starts to emerge about what investors are thinking.
And here it is. This is the core dynamic we're seeing. Just look at this split. The total number of investors is actually softening a bit, but the average amount each of them is putting in is skyrocketing. It's such a powerful sign that the market is consolidating its bets.
So what do you call this? Well, we're calling it selective conviction. See, the crowd hasn't gone away. It's just gotten a whole lot smarter and more focused. We're talking about more discerning investors who are looking for real substance, proven traction, a killer story, and a real reason to trust before they write those bigger checks.
Okay, so if conviction is the new currency, how in the world do you earn it? Who's actually succeeding in this tougher environment? Well, it's the ones who are turning their audience into an army.
Take a look at this number. Seriously, that is not a typo. One company, Legion M Entertainment, has brought in over 58,000 investors since 2016. In a market where everyone's being cautious, they continue to rally thousands and thousands of people. So how are they doing it?
Their secret is mastering this idea of the investor. It's a simple concept, but it's incredibly powerful. Your most passionate customers are your absolute best potential investors. Legion M doesn't just sell you a movie ticket, they sell you a piece of ownership in the movies you love.
And what this does is create this amazing self-reinforcing cycle. You're not just getting capital, you're building a whole community of advocates who will champion your brand, buy your stuff, and fund your growth, even when the rest of the market is pulling back. It's like building a moat around your business, but it's made of loyalty.
Okay, so all of this builds into some really clear, actionable advice. If you're a founder looking at this whole landscape, the big question on your mind has to be, do I raise money now or do I wait?
The decision tree here is actually pretty simple. If you've already got revenue coming in, you have a community you can mobilize, and you've got a story that earns trust, then yeah, go for it. Raise now. Those bigger checks are waiting for you. But if you're pre-revenue and you haven't built that foundation of trust and traction yet, the market's advice is really clear. Wait, go do the hard work first.
Because that's really the ultimate takeaway here. Investor sentiment hasn't just vanished, it's matured. It's grown up. The era of easy money is over. The crowd is asking way harder questions, and it's placing bigger, more thoughtful bets on the companies that have truly earned their conviction. So the only question left is, have you?